Do you have an FHA mortgage right now on your property in San Diego and you want to refinance it and drop the rate considerably? Or are you thinking about using an FHA mortgage on your next property purchase in San Diego and you want to plan accordingly? What's going on? This is Scott Taylor with SanDiegoRealestateHunter.com, and in this video, I'm going to detail out how you can use an FHA Streamline Refinance to drop your rate to some of the lowest in U.S. history, not needing to pay for or need an appraisal. There's no verification of job whatsoever, and essentially not needing 99.99% of all that annoying supporting paperwork. Do you want to know more? Let's dig into some of the basics to qualify. Number one, so obviously if we're doing an FHA Streamline Refinance, you need an FHA mortgage on your current property, or as I mentioned earlier, on the property that you might be purchasing in the very near future. Number two, at least 210 days needs to pass. So 210 days needs to pass from the closing of your last mortgage to your brand new mortgage. And to get a little bit more technical, it's the closing of your last mortgage, 210 days from the day that you apply and we pull what's called your FHA case number. Number three, have made 6 consecutive mortgage payments. Number four, you're allowed to have one mortgage late in the last 12 months, but the last 3 months have to be dead on time, okay? Number four, or is that number five? You need to have a net tangible benefit of at least 0.5%. So let's simplify. If your rate right now is 4.75, just to use a random rate, it needs to be a 4.25% or lower, right? 0.5% different as a net tangible benefit. However, if you have an FHA mortgage from December 2014 or longer ago or older, your MIP at that point, right, per month was 1.35%. Now it's 0.85%. That already makes up your difference. So you definitely want to refinance. So let's dig into some awesome points of this loan that really make it stand out. Number one, employment verification is not required. So employment, job, income, it's not required. Appraisals are not required. We use the value of your purchase price or the value of your last appraisal. So by the way, that can mean, and you're probably not, but that can mean that you're underwater on your mortgage and it does not matter. Alrighty. So why don't we dig into some of the common questions and answers for the FHA Streamline Refinance. So the question, can I do or have done the FHA Streamline Refinance more than once? Absolutely. You can do the FHA Streamline Refinance as long as you meet the criteria that I just went through as much as you want. So as a theoretical, let's say that you did this a year ago or 2 years ago and you want to do it again because you reach all the criteria and your rate can be significantly lower, obviously, then it makes sense to do. Let's do another question. How can closing costs be paid? Okay, closing costs on this can be paid a couple of ways. Alrighty, one way the closing costs can be paid is what's called a no-cost loan. Okay, what a no-cost loan is, you qualify for a rate here. We do your rate right here. There's a difference called a lender rebate. That lender rebate, there's some money on the back end. We use that to pay for your closing costs. That's one option. Another option, of course, is that you pay your closing costs out of pocket, right? From your checking, savings, etc. Or obviously, we can do a little combination of we get some money on the back end with the lender rebate and you pay some closing costs out of pocket. So another common question with this is, hey Scott, can I finance my closing costs into the loan? No, that's not one of the two options. So we can't actually make your loan amount a little bit bigger and use your closing costs in that loan. With the FHA Streamline Refinance, you either can do a no-cost loan and use that lender rebate to cover cost, or you can pay those costs out of pocket. right? Another common question, because it's about income and verifying. You're thinking of the old school way with a purchase loan. Hey, what if my income has dropped, or I've lost a job, or I now work part-time? Is that going to matter? No. Employment and income is not verified. So loan-wise, we're not looking at your debt versus income ratio on this to qualify, okay? One common misnomer that I see talked about quite a bit on this. They say, hey, credit score on this doesn't matter. That's not technically true, okay? Credit score on this doesn't matter. The higher your credit score on this, regardless of what you read anywhere, the better, right? You want a higher credit score to qualify for a lower rate. Alrighty, so let's take it to some final great things to remember on this, and maybe some things that you don't even know. Alrighty, we can structure this when you do your refinance to where you can miss 2 mortgage payments. Now, let me get an example. Let's say that you make, and I'm just using some random examples here. Let's say that you make your February payment, okay? We close this loan, let's just say March 15th. You didn't make your March payment. So you skip your March payment, you skip your April payment, and your first payment is May. So let's just say that your mortgage payment right now is $3,000 a month. Let's just use a number. You would skip 2 payments. That means that you get to keep in your pocket $3,000 times 2 equals $6,000. Another point to remember is you prepaid interest, prepaid property taxes, prepaid mortgage insurance, okay? You have those items in your escrow impound account. You can look at your statement right now, whether you have a printed statement or you log in online to see that. Within 20 days, once we close this loan, within 20 days, your past lender by state law in California has to send you a check within about 20 days, I believe what it is, for the difference that's still in your escrow impound account, okay? So whatever's not used, because that's your money, whatever hasn't been used, they owe. So potentially, we can miss either 1 payment, depending when we close, or 2 payments, and you get your escrow, your amount that's in your escrow account refunded back to you. And don't forget, there's no appraisal. So you don't have to pay the $400 or the $500 or the $600, right, to get an appraisal done on your property to hope it comes to a certain value. So then the loan to value works on the property. We don't do any appraisal whatsoever. Okay, so what do you need to do to get started? It's very simple. Go to scottsloanapp.com. In 15 minutes or less, you can fill out my online application. Once that is done, I'm going to pull your credit. Okay, I pay for it, you don't. And there's something very important about this. Don't forget, we verify that you've made your mortgage payments. Can't have any more than 1 late in the last 12 months, and the last 3 months have to be on time. And number 2, we do it to verify your credit score. With your credit score, it tells us what rate we can do it at, okay? And then the final step on that, and probably the most amazing part about an FHA Streamline Refinance, is the very, very limited documentation. From there, probably all that we're going to need from you is your latest mortgage statement. And once again, either you have a hard copy, just scan it into your computer, or you can log in, probably these days, right, 2020, you can log into your mortgage company's website and download your latest statement. And by the way, when you do that, you're going to see how much you have in your escrow account that you're going to get refunded back. And the only other thing that we're going to need is your homeowner's insurance information. Right? We want your homeowner's insurance information because obviously on your new loan, you're going to have homeowner's insurance, and that just simplifies the process. That's it. If you have any questions on that whatsoever, shoot me a call, email, or text, and I look forward to chatting with you sometime soon.